In this video, I'm going to be guiding you through Chapter 20, Monopoly. So the definition of monopoly is that a pure monopoly exists when one producer supplies the entire market. And a legal monopoly is where a firm owns more than 25% of the market share. So moving on to the features of a monopoly. A monopoly exists in markets that are completely dominated by a single seller, but there will be other smaller firms operating alongside it. An example is Indian Railways, as they are the only supplier of railway travel of the whole country of India. Another feature is that a monopoly is able to provide a unique product, which is highly differentiated, and there will not be another exactly like it. So in terms of a pure monopoly, there will be no rivals at all in the market. The next feature is that they are a price maker. This means that they control the prices they charge and are therefore known as price makers. They can set the price to whatever they fancy, force the prices up, and restricting the level of output. Simply put, the monopoly is the one that controls the prices, as there are no substitute goods to go to. Next, monopolies are protected by obstacles that prevent new entrants from trying to compete. This makes it really difficult for other competitors to enter the market or deliberately driving them out. An analogy could be you trying to join a sports club, but they require a $1 million payment in order for you to get access. And for you, the barrier to entry of $1 million is way too high. As a result, you cannot join the sports club and you cannot compete, and therefore the winning team will continue to win. The next few slides have the types of barriers to entry that monopolies can utilize in order to disincentivize competition. Firstly, legal. Governments can legally exclude competition by awarding a contract to a single firm. These contracts can last between 10 to 30 years, and once awarded, all competition is legally forbidden. Next, we have patents. Patent is a license that prevents rival firms from copying the design of a new product or technology. And this allows firms to charge a higher price and recover the large investments of research and development that they have put into the product. And if a competing firm was to copy your design, they will have to pay a licensing fee or risk getting sued. Next, we have marketing budgets. This is when they spend a large amount of money on advertising to strengthen their own brand. For instance, Coca-Cola spent $2.8 billion on advertising in 2014 alone. Any new entrant would not have that kind of money to match that budget alone. Next, we have technology. This is having access to up-to-date technology that can lower its average cost significantly. This is when the companies invest in automated factories, heavy use of artificial intelligence, which as a result will be able to increase the quality of the product and at the same time increase quantity, and competitors will struggle to compete and might be forced out of the market. Next, the high startup costs. Money is obviously the most important part of starting a business. But in order to properly compete with a monopoly, you need a significant amount. For instance, competing with Rolls-Royce in jet engine production, it will cost you multiple millions, if not billions of dollars of research and development in order to understand how the jet engine works. Not only that, you need to find a supplier and a manufacturer to sell you and manufacture the engine for you, which costs a significant amount of money. And the likelihood that Rolls-Royce already has a contract with them is very high. So moving on to the advantages and disadvantages of a monopoly. Firstly, a monopoly is very efficient as it avoids wasteful duplication of resources providing the same product or service. Imagine your electricity service provider. It makes sense that a single electricity company was to supply electricity for the whole of the country, as it requires critical infrastructure to supply electricity to all the homes. If a competing firm wanted to compete with the electricity company, they will need to build this infrastructure again, as they are not allowed to use the existing ones because these belong to the competitor. As consumers only need one supplier of electricity, they will be only using one set of infrastructure. However, the disadvantage is that there's no real incentive to keep the cost down, and it might adopt an inefficient, carefree approach to business. As there are no competitors in this market, firms might adopt some unnecessary and wasteful costs, such as senior managers traveling first class at the firm's expense. and this money could have gone elsewhere in the company. Another advantage of monopolies is that they are able to give us choice, as they can afford to offer a range of product variations and tiers under one brand to cater for all of the different market segments. Say, for example, a company called Luxottica, who happen to own LensCrafters, Sunglass Hut, Ray-Ban, Oakley, and many more. If you didn't know about it, check them out. They make a wide range of budget to premium options for their customers. The budget tier will include Arnett and Vogue. The mid-core tier will include Ray-Ban and Oakley's, and the premium tier will include Armani, Prada, Burberry, Chanel, and so on and so forth. And yes, Luxottica do have the rights and licensing to manufacture all of the brands mentioned above. And fun fact, they are all made in the same factory. The disadvantages, however, is that the choice is completely restricted because there is just one supplier in the market offering a unique product. In the case of Luxottica, they are giving you the illusion of choice, and consumers cannot switch to an alternative provider because there are no or not that many other choices that exist. Quality is an advantage as the firm has the financial freedom to use their premium materials rather than cutting corners to survive. And because they have the technology, they have the money, they have the research and development, they can make a very high quality product. However, the disadvantage to this is that they have no incentive to innovate and releasing the most up-to-date products to its customers, as they want to make as much money on the current iteration as possible before releasing a new one. Monopolies have the ability to truly innovate, as their profits will allow them to have the massive financial resources needed to invest heavily in research and development, and if successful, they can develop brand new products and advanced technologies. An example would be Tesla, as they were able to research and develop the battery in the car. Moreover, they were the company that invested heavily into autonomous driving, and they are getting pretty good at it. The disadvantages, however, is, again, they have no incentive to spend more money on product innovation. As they are already making a lot of profit, they've got no incentive to spend more money to innovate further. Monopolies could theoretically lower their prices as their average cost of production is very low, as they are able to utilize their economies of scale effectively, and they can lower the price for consumers. So these savings in costs will benefit the customers. This assumes that the firm is willing to pass these cost savings to the customer. The disadvantage is, however, that the monopoly is a price maker and is able to charge whatever they want to its customers, and the customers will have no choice but to pay the price being asked. And lastly, economies of scale. The advantages of monopolies is that they can exploit these, which will lower their average cost of production. As firms build strength through economies of scale in the domestic market, they can also compete very effectively overseas. And the disadvantage is diseconomies of scale. This is when a firm gets too big and they suffer from communication problems and bureaucracy. And the result of this is that the monopoly's average costs will rise, and they will just simply pass on these costs to the consumer. I hope that helped. I hope you guys have a good day. Bye bye.